Good morning, everyone. David Paul speaking. I'm the Managing Director of VectorVest here in the UK. And I'm looking at the VectorVest Composite of the UK, which is an equally weighted index of all of the shares that we follow on the LSE and AIM, about 2,200 shares. And the candlestick plot is fairly obvious. And on the candlestick plot, you should be able to see red and green triangles. Now, those red and green triangles reflect the VectorVest medium-term market timing system known as the DEW. And that's the market timing system that I've been using in this campaign that started way back on the 7th of April. Now, the two line studies below the price are the green one is the proprietary VectorVest buy-sell ratio, and the blue one is our proprietary market timing indicator, which is a momentum indicator. And the one thing that's noticeable, ladies and gentlemen, is that the price of the VectorVest Composite has made a double top over the last day or two. In fact, the momentum indicator and the buy-sell ratio have failed to respond. And that's what technicians would refer to as a normal divergence, but it is a bearish normal divergence. It's a leading indicator of change. The buy-sell ratio and the market timing indicator have been overbought for some time. And as I mentioned in these videos, markets can be overbought for quite a spell. So we have to wait for a signal from price. But it is my view that if we, in fact, printed a DEW sell signal, and we're close to that, not quite there yet, that signal should be taken very seriously indeed. I'm holding quite a few positions in the UK, and I shall certainly be lightening and watching stops on those very carefully indeed. I want to introduce a proprietary VectorVest measurement called the Comfort Index, which is a big part of my swing trading. It's a measure of the long-term trend. It looks at the trend of the share over the last 3 years. It looks at the volatility of the price action, and it looks at the stock's fundamentals. And ladies and gentlemen, if the trend is strong and getting stronger, with little volatility, and the fundamentals of the company are improving, then those all score well on the Comfort Index. And I think you would agree, if you've got a share that's trending with little volatility and the company's fundamentals are improving, that should offer you some comfort, and thus the name. It's scored on a scale between 0 and 2. Above 1 is fair, and when you get above 1.2, 1.3, this is a share that's trending strongly. And I use this a lot in my swing trading campaigns. And this is a very simple little search. I presented here before, which has a baseline of a comfort index of 1.2. So it's only looking at shares that are trending reasonably strongly within the FTSE 350. So there's plenty of liquidity and the spreads are tight. And I've sorted, that gets a lot of shares, and I've sorted those shares by a combination of CI, which is the long-term trend, times the annualized projected growth rate of those shares, CI times GRT. And this is a core aspect of VectorVest where we want to try and get the best of both worlds. We want to try and put together shares with great technical features and great fundamental features, and certainly for momentum type trading, that's all about earnings growth. So I put those two together in CI times GRT. And I've been using the output of this both in the UK and in the USA. And that's the performance up until last night. Now, yesterday, the 24th, was a bad day. On the 25th, I see we're actually down 1% already based on an escalation in the virus situation, especially in the southern states of the US. But since our buy signal on the 7th of April to last night, the VectorVest Composite was up 12%. And the top 10 out of that particular search was up 25%. And I think you can see, while I'm getting quite anxious personally, I don't want to give that away. And whether this run up that we've had from the lows in March to yesterday. Whether that's a rally in a bear market or whether it's the start of a new bull market, I'm not so sure. But nevertheless, we've managed to lock in a pretty reasonable annual return just in that little move. So up 25% in that. Uh, that's the USA market timing, and we've got the same, not the same divergence, because the US market couldn't go up and make a double top that we made in the UK. And this, I think there's 5 or 6 days where it in fact made a top, which was at a Fibonacci level of the last little range. The buy-sell ratio was dropping off. Here I've got the medium-term market timing signals, and we got a buy, in fact, 1 day earlier than in the UK on the 6th of April. And I've used pretty much the same search, except that I've put in a volume criteria in the American markets. I'm looking at all 8,000 shares that we follow in the US. Got a baseline in the long-term trend at 1.2. And again, I've sorted all of the shares, lots of shares that come out of that, by this combination of a share that's in the throes of a strong trend and a share that's growing earnings strongly, the best of both worlds. Technical analysis, the study of trends and turning points, and fundamental analysis, certainly in terms of momentum trading, is all about strong earnings growth. That's what that portfolio has done. It shot the lights out. That's again to last night, to the close. The US market is up a huge 17.95%, but that portfolio is up 55%, and I'm holding quite a few of those. So time for me, I think, if we do get a sell signal from the medium term timing system, then yours truly will be wishing to lock in a great deal of those profits in the next day or two. So my advice is to be very careful and watch stop losses very carefully indeed. Anybody who would like a 30-day trial of VectorVest, you can replicate those results. The 30-day trial of VectorVest, if you go to vectorvest.co.uk, then just click on risk-free trial and you're there. Thanks very much. I hope this all helped.